Hello. Good morning, individuals. It is February 8th, I think, 2023. It's a great day to be alive. Grateful to be alive because we're all beautiful, great traders. Anyways, make sure you guys subscribe, hit the like button. Subscription is key. We're going to be looking at some crazy shit here, okay? All right. Let's do this shit, guys. Okay. We're going to look at the weakening dollar today. What bond yields look like they're doing and what that's going to mean for stocks and what stocks look like they're going to do. Let's just get into this shit, okay? So, first things first. I want to show you guys this dollar right here, okay? It, like I told you guys yesterday, it was touching the top of this channel. Odds are it was going to go down dead. But now it's facing a relatively strong or key level as it rejected here and went right back up. Okay, so this is like $1.03.50. It was also a point of support here and kind of chopped around that area there. But what is it going to do? Because on the 1 hour chart, there's bullish divergence, as you can see. But on the 2 hour chart, there's nothing. So chill. We should wait. And if I had to bet, honestly, guys, I think the dollar has some more downwards room to go because it looks like the risk-off assets are going to win today. Because for some reason when bonds... So this is the 10-year yield. This is the 2-year yield. They're both 1 hour charts, okay? And when bond yields go down, the risk-off assets go crazy. And it looks like bond yields are about to go down. At least this divergence is suggesting that because this divergence dates back all the way to February 3rd. Okay, let's look at this. Undoubtedly going up there. Nobody's going to argue that. Well, this is undoubtedly going down. This is the 10-year yield, mind you. And we could say the same about the 2-year yield. I don't need to draw it out. You guys can see. So that's concerning for bears, to say the least, because when this goes down, equities tend to go up unless we get the inevitable scenario where bonds and stocks lose that correlation again. And it could happen because I think that correlation is getting weaker and weaker every day. And I hope it does, honestly, because then we get closer to capitulation and then we can get this over with. Now, I say that like every time is the same and bonds and stocks have to be correlated in order for us to capitulate. That's not true. It's just I think that when we capitulate, stock money is going to move into bond money. That's it. That's what I think is going to happen. So, weakening dollar. We'll see how it acts today. We'll see how the bond yields act. Keep in mind this divergence has been since February 3rd, so it could continue playing out today. Same with Tesla, right? Like this. So, guys, I showed you those things showing you that probably there's a good chance tech stocks and risk-on stocks continue to rise. But this is suggesting otherwise because obviously I showed you guys this yesterday and I told you not to play it out yet, which was right or I told you not to play it out at all because it's Tesla, but you still could. Like, I guarantee it's going to go down. So Tesla does not want to surpass that white line I drew out a long time ago. As you can see, it's a point of resistance here, a point of resistance here. It's acting as resistance again. Now we have bearish divergence. If I had to bet on it breaking that white line, I wouldn't. It's extremely overbought. You guys want to see something? Look. From here to here, it has gone up 92% in 32 days. That is overbought. I don't need to see an RSI to tell you that is overbought, okay? Guys, don't jump on this. Don't FOMO yourself. Tesla will go down again, okay? It's markets go up, they go down. You make money both ways, guys. It's really, don't FOMO. Don't get emotions involved here. Do not buy Tesla at this price, okay? And if you do, good for you. Whatever. Meta is in kind of the same scenario. I wanted to look at Meta and Tesla. Obviously, you don't need an RSI to see that this one's overbought as well. Let's look. No, not price. Day and price range. Look, from here to here. 116% in 94 days. Once again, overbought to the moon. So, there's a ginormous gap here. It looks like it could be forming an island reversal with that bearish divergence. And similar to Tesla, there's a white line here. That white line is the 38.2% retracement for Meta. I will show you guys how viable that retracement is. And it acted as resistance like twice here. You could argue that it was here as well. Now I'll show you guys where that 38.2% retracement came from. As you can see, this is the daily chart. It's from the top to the bottom. It's just, I can't see it breaking it with the bearish divergence like that, with how overbought it is. And yet again, it probably could, because when things are that overbought, those equities tend to do very irrational things. Okay, let's look at the S&P 500. So I thought about it, and I'm like, this could go up, because it's kind of like an inverse head and shoulders going on, in a sense. Like look at this. Okay, so this is the first shoulder, this is the head, and this is the second shoulder, and it kind of broke it. Like, okay, so we should probably put the line there. So it's actually at the line, and it's going to have trouble surpassing that line, whether you want to admit it or not. And I don't know if I've ever shown this, but look, 50% retracement, which is big for S&P 500. It always acts. Guys, it's at the 50% retracement. Look, I drew it out, 41.64. The price is at 41.63.99. Okay, so it's right there, and it's been fighting it for a while. Now, what do we think is going to happen? Well, let's pull out a 1-hour chart, see what's going to happen in the short term. That's what we do. That's what we do here, okay? We have no clue. I can already tell you we have no clue. No clear direction of where we're going. I have this channel drawn out, so what are we expecting? Let's extend this a little bit, right? Okay. Yeah. All right, so today we're going to get 6 more 1-hour candles, or 7, I don't know. And odds are we stay in this channel today. Yeah, that's the likely scenario. Unless it crashes, because it's a lot closer to the bottom of the channel than it is to the top. So, I have no clear direction or bias towards where it's going to go. It's probably going to start the day green, because we have bullish momentum going on here, but nothing I would be betting on. Maybe we should look at the NASDAQ, see what that's saying. Once again, we have a channel. It's a bit more broadening than the S&P 500 channel, so you could kind of extend it if you want. Nope, didn't mean to do that. Anyways, no divergences, nothing for us to be betting on. And how about the Dow? The Dow, neutral. So guys, equities, securities, risk on, risk off, we don't know right now. Those yields are set to go down beyond belief. That's for sure. We just don't know when, or what it even means for stocks. But what it does mean for bonds is that you can go long on bonds. And I think long bonds for the next week is a great idea. An amazing idea. If we've had that divergence playing out for the past 5 days, then you can feel good about going long bonds. So I'll show you guys once again. Now, let me show you the stock that is long bonds. This ticker is TMF, okay? TMF. Massive gap here, okay? Let's go. Let's see. So I'm surprised that there's no bullish divergence here after the bearish divergence we've just seen on the yields. But who cares, okay? So if you see the yields go down, which it looks like they're going to, then this is going to go up, okay? TMF, look into it. It's not financial advice. And now, last but not least, let's take a look at Apple. Kind of in the same situation as Meta and Tesla, fighting this white line. hard to beat that white line. But the bearish divergence on the 1 hour is not nearly as strong as Meta and Tesla, as it kind of looks like the Nasdaq and S&P 500. Like, sure, there's some here to here and then there to there, but not strong enough. I've done this too many times. When there's usually a big price move in between your lines, it's not that much of a valid divergence. So keep an eye on Apple. But white line here, 157, 158 range, has been resistance before. Boom. It's been resistance here. So we'll see what happens. Economic calendar. Next week, Tuesday, February 14th, we have CPI, 6.4% expectation. Really? What was it last month? I don't even remember. Oh no, the last month was 6.4%. What's the forecast? I have no clue. I think we'll find that out eventually. But you know, I don't even care about that because, like, yeah, it causes a market reaction. We're gonna look at charts to guess our market reaction because sometimes it's a high number and the market still soars, or it's a low number and the market still tanks. So it doesn't matter. But it's a lie, guys. If they wanted to tell the truth about inflation, it'd be over 10% every month. Come on. You gotta be kidding me. Like, look at this article, okay? Strength in the bond market is signaling that the U.S. economy, the bond market is signaling this, guys. Okay. So I just showed you that yields look like they're gonna go down. So that might mean I support this article. Guys, the 2-year yield is at 4.44 and the 10-year yield's at like 3.65. That is called an inverted yield curve. But this article, their explanation is that the spread between corporate bonds and treasury bonds are not that big. So usually during a recession, people like to float towards treasury bonds, making corporate bonds go up like crazy because because you should be rewarded more for taking more risk in a recession, which makes no sense to me. No sense, especially because right now these corporations like Apple and Meta and Tesla, that might have been the case for those corporate bonds maybe 2 months ago, but right now they're on risk on mode and stages of a bubble. But the way bubbles work is that they'll start to slowly pop, and then like there will be hopium, which we're in the hopium stage right now. And then, boom, it actually pops because people think we're going back to normal. And these greedy mother effers like to trap even more people. Look, in fact, corporate bond yields relative to U.S. Treasury suggest the economy is not going to enter a recession. That's a lie. Like, we're already in one, guys. Like, how many every day I see this company's cutting jobs. This company's cutting jobs. Yesterday, I showed you guys Boeing was starting to cut jobs. Not a tech stock. It's Boeing. And then after that, I see eBay is cutting jobs. 4% of its workforce. 500 jobs. Done. Guys, it's a recession, okay? This wasn't happening. I'm young, okay? I'm a young man. I was not old enough to live through the '08 recession. And as far as I've been aware of news, I have not seen job cuts like this in my life. We are in a recession, okay? And now we have to scare people. So the risk of nuclear Armageddon is at its highest point since the Cuban Missile Crisis. I don't even care, okay? They're going to keep hitting you with this, guys. Do not be scared. They're not hitting you with no nuke. And like I said, if they do, at least you own silver. Hoping you own silver. Because then it's money printing into infinity. But I don't think they need a nuke to sell you dumbasses on money printing into infinity. They had a fake virus and they did it, so whatever. I don't even care. I'm pissed right now. Okay, guys. So stay blessed. Make some money. Look into TMF, not financial advice. This gap right here is definitely getting filled. It looks very, very likely. So make some bread today, okay? Peace.